Let's talk appraisals. Let's get started. Okay, so when you buy a property, you generally get a loan. When you get the mortgage, the bank is like, well, I want to reduce my risk in the event that you stop paying. Therefore, I'm going to bring someone out to do a valuation on the property. And that's called an appraisal, right? So they want to say, okay, you're in contract for $1 million. Is it worth $1 million or is it worth less? And I have also seen it be worth more. If it's worth more, doesn't mean anything. If it's at value, fantastic. If it's less, then the buyer either needs to cover the difference, the seller needs to drop their price, or somewhere in the middle. So it's really case by case. Here are some of the challenges with appraisals. The bank does not choose who the appraiser is. They did that back before 2008. That was part of the problem. Banks were like, well, you're not going to value this at $1 million. I'm going to go find someone that does. Now they go through basically almost like an agency, and then that agency will find someone. So there's those degrees of separation as a way to protect any sort of bias. Here's the deal. Appraisers come in all shapes and sizes, and they also come from different locations. So for example, I helped someone with an appraisal, because sometimes I help clients if they're trying to get rid of PMI, cash out refinance, whatever, in Simi Valley. The appraiser was coming from Orange County. He had never stepped foot in Simi Valley before. He knew nothing about Simi Valley. Now, the problem with that is that if they don't take the time to understand the market, they're not going to know that homes north of a certain street versus south of a certain street have certain values. In Westlake Village, for example, I was working on a deal with another agent who had an appraisal, but the appraiser was taking comparable sales in a completely different neighborhood, like completely different. And so I had to explain, like, this appraisal's wrong. Fun fact, it sold for way less. So one of the issues with appraisals is that the appraiser may not be familiar with the neighborhoods. And because they're not familiar with the neighborhoods, they may value it in either direction. Another great example is when I helped a buyer buy in Malibu. I kid you not, millions of dollars off. So my client was buying it for $5 million. We had one appraisal at $5 million, required a second one. Second one came in at $8.5 million, $3.5 million higher. Why? Because they were looking at comparables right by the beach. Right by the beach sells for a huge, huge, huge premium. And those are things you have to keep in mind. So when you say, I'm going to get an appraisal, you have to really evaluate it. If you're thinking about getting an appraisal for a listing, some buyers care, some buyers agents care, some even lenders like to see it. But you always have to take it with a grain of salt. When have you seen a bad appraisal? Or when have you seen a great appraisal? Comment below. Love to get your thoughts. With all of my listings, I actually meet with the appraiser because I want them to understand the neighborhoods. I want them to understand and see what I'm seeing and why we're under contract at a certain price. Talk to you guys soon.